Man, I need to get a new chair. My chair always be doing that. Welcome back to the channel, everybody. Thank you guys for tuning in to the Money Mindset YouTube channel, where we talk personal investing, and investing into the stock market. Everybody, do me a favor before we start this. Actually, can you do me two favors before we start this? First of all, smash that like button. Definitely do that for me. Hit the subscribe button. And then actually three things. Please, guys, sign up for Webull. All you have to do is deposit $100 and you will receive 2 free stocks, guys. That's 2 free stocks, nothing other than that. Let's talk about the stock market. I'm just going to be showing you guys a review, like I say, every 2 weeks of my portfolio, and I'll show you guys the new purchase that I just made and what I'm looking at in terms of dividend income to be investing my money into. And also, I started up an E-Trade account. This is just another brokerage. So like Robinhood is a brokerage and Webull is a brokerage. E-Trade is another brokerage that I just started up, and then I'm going to be probably trading and essentially having most of my dividend stocks over there. So I'm just, in the process of reconstructing how my portfolio is distributed between Robinhood and between E-Trade. So I'll definitely let you guys see everything on E-Trade. I'll probably just pull it up while I go over my portfolio just to show you what it looks like and how a future video is going to probably look like. So let's just jump into the Robinhood portfolio and I'll show you guys what I just purchased last week. All right, let us go into Robinhood. All right, at the top, we do the day and the week and the month and 3 months. All right, so right now my portfolio is sitting at $16,899 with a down percentage of 1.44%, but as you can see, it's bouncing back up for the day. On the week, I'm down 1.8%, which is $310. On the month, I'm down $35.96 with 0.21%. And then on the 3 months, this is where we shine, baby. We're up 38.19%, which is a total of $4,673. So as you can see, my buying power is 1,027. So I'm going to be looking maybe to buy something in this video, but stay tuned to see what I'm going to be purchasing if I do in this video. But let's just look at my positions in my brand new position that I had just bought. So as you can see right now, Store Capital is our real estate trust, and this pays me every 3 months a dividend. And I have about a market value of $2278.92 in it. Average cost $29.52, and my today's return is $79, and total return is $278. So as you can see, I'm up about 14% on this investment, which is pretty good if you ask me. And so I'll just continue to keep on adding to it. I have about 68 shares. I want to get that to 100 shares. And once I get that to 100 shares, I'll probably use that money that I would have put into this company and put it into other companies. So I'm looking to shoot for 100 shares per company that I have. So the next one is, you guys guessed it, Tesla. It's my breadwinner right here. I have 10.679 shares with a market value of $8,741. And this has gone up as high as almost $10,000 for market value. Average cost is $421 with a total return of 94%, which is $4,233. This one doesn't pay dividends. I don't know if they ever will pay dividends, but it is definitely a growth stock that will continue to climb in the future because of what Tesla is doing for the future of the automobile industry. And once I probably come to terms with selling this position, I would probably dump it into dividend and income paying stocks. So that's the plan. So if you ever see a growth stock in my portfolio, I will let it run up to where I think I've made the most amount of money on the stock, and then I would use that money and put it into income dividend stocks. So if this market value gets to $10,000, right, and let's just say I just sell it, I would put that $10,000 into something like a company that yields about 5% year after year on that $10,000. So if you do 5% of $10,000, then you will get $500 a year in passive income from dividends. So that's the plan. That's the plan. Apple, it's taken a little dip. I think I'm going to continue purchasing. As you can see right here, February 11th we have a $2.40 dividend coming in, which is nice, a nice extra payout for myself. Passive income. I have 11.7 shares and a total return of $83, which is a 5.61% increase, which is pretty good. Coming to terms that each investment that I've already done, I've always struck good on. So I'm in the positive. So it's definitely a good sign. I have 17 shares of CVS with a market value of $12.68. I have a total return of $68.24, another 5.6% gainer. This one pays me a dividend as well, and I actually received this dividend February 1st of the month, $7.26. So it's definitely nice getting paid some passive income the first of the month. And it's usually that first of the month, you're usually sending out money from your bank account because you probably have to pay bills and stuff like that. But it's nice to see something come in passively at the first of the month. So, so all I'm going to do is just reinvest those dividends. I like to stack my dividends into the buying power so that I could, use that money to buy other shares. So not necessarily buying the same stock, but being able to put that money elsewhere into other dividend stocks. But everything is always getting reinvested. Don't worry. And then last but not least, this is my newest acquisition. It is Tattoo Chef. Like I keep on saying, I'm going to be dropping a video about why I'm bullish on Tattoo Chef. But just in small terms, they have the craziest potential upside. They have a great management. They have the great staffing, and they have a great CEO and CFO. And their recipes and their SKUs, and the SKU is just products, are going through the roof. They've created almost 100 SKUs now, and they haven't even hit retail, shopping, grocery stores. So they're in like Costco, Target, Walmart, but they haven't hit the traditional grocery stores, which they have a crazy upmarket, and they are plant-based and like vegan frozen foods. So frozen foods haven't ever been innovated in a long time. So this is where they come in and they're innovating because they're creating more SKUs, more product numbers, and they're pushing it into the market of where people want to eat healthier and people want to eat plant-based and people want to eat vegan. So they're attacking that market because there's nobody else in sight when it comes to frozen foods and plant-based that has the popularity as them, and they have the innovation as them. So that's exactly why, in small, simple terms, I like Tattoo Chef. So I had to go ahead and throw $2,000 in it, and I bought 82 shares of it. I would like to get that up to 100 so that I have 100. I just like the number 100 shares for each company that I have. But like I said, average cost is $24.13. I have a total return of 0.09 negative, so we're down $1.77. But this is a long-term play. I understand that. The market cap is 1.89, and I'm looking to see this market cap should get to about 5 billion. More, actually even more than that, since they have a whole untouched market. So I'm looking at 10 billion plus. So if you do the math, that's 5x my investment in the coming years. So, when it comes to risk reward, there's no doubt about it. This company is a beast. So definitely why I invested into Tattoo Chef. And if you haven't, and guys, remember, I'm not a financial advisor, so if you see me investing in something, don't think that I'm telling you to invest into it. This is just my perspective, and this is exactly what I like in a company, and I'm not telling you to go buy it because I'm just a random dude on YouTube. But do your own research, guys. Even when I see somebody else talking about a company, like for instance, Tattoo Chef, I saw somebody else talking about it, and they broke it down, and then I did my own research on top of it, and I'm like, yeah, you know what? It actually makes sense why I should put my money into this company. So definitely doing that. I had ordered some of their products and I tried it, and it was really good. So definitely do your own homework. But I can show you right here what I'm looking to buy. These are probably in my top 2 to 3 stocks I'm looking to buy. O Realty is a real estate company. Now they do not buy property for people like me and you that live in a house to rent out. They invest in properties that rent out to people like Walgreens, people like CVS, people like Walmart, people like Kroger's, people like, Target, all the big brand names that, that are looking for a place to live and looking for a place to set up shop. Those are the places that Realty Income targets. And so I don't think when it comes to the real estate stock market crash, I don't think they will be that much affected by it, because it's not, people buying and selling homes and stuff like that. So that's why I was looking into this company. They have a dividend yield of 4.6%, which is nice. It fits that 4 to 7% I'm looking for, and it has a buy rating of 60%. So I'm looking to definitely do that. And as you can see, the 52-week high is $84.92, and this is at $63.13. So it has room to grow as well. Let's see, and then AT&T. So this is one I've been on the fence about, because one, they have a high dividend yield. So the dividend yield right now is 7.23%, and the cost of it is potentially, pretty low if you look at other companies and in their market, the telecom companies, $28.59. But the problem with this is that, one, when you invest in a company like this, you're not seeing the appreciation anywhere in sight. So you could just see over the last 5 years, it's been floating around 40, 30 land, and it hasn't done a lot of innovation and stuff like that. So that's something that I'm kind of worried about. And also, they have a high level of debt, and they've been investing into just, poor companies recently that they're now trying to get rid of, and that they're trying to shift how they're doing business and changing their business model when it comes to innovating and creating good investments. So those are a couple of things I'm worried about. But like I said, on the upside, they have the telecom, so they have the phone service, and they have HBO Max, which is a streaming service, which is extremely popular right now. So they would be in the field of competing with Hulu, and Netflix and companies of that nature. So they kind of have a, advantage over other telecom companies because they don't have that feature. Also, like I said, the 7.23 dividend yield. So if I put $1,000 in, I would be getting $72 back each year, which is about, if I do quick math, like 15, 17 bucks every 3 months. So they have a couple things. People don't really like AT&T as far as appreciation, but the dividends, it looks really, really, really good. Or definitely Walgreens or Verizon. I've been paying my Verizon bill every single month for my whole life, and so I have no problems with them. I just didn't do a little more research into that company, but that's where I'm looking at right now. I think right now, honestly, I'm gonna go with Realty Income. I'm gonna buy $1,000 worth of it right now, so you guys could witness this. Definitely not 1,000 shares. I wish. That would be great dividend income, but I'm going to be buying in dollars, and I'll be buying $1,000 of Realty Income. So as you can see, order received. Nice. I'm going to screenshot that, put that on my story, and then now I own Realty Income. Oh, right here. So I have 15.86 shares, and I will be getting about $46 every single year for my investment, and this pays monthly. So definitely I'll show you guys that I will be getting payouts every single month from this company. So definitely stay tuned. Thank you guys for watching the video. I appreciate it. If you made it this far, please smash the like button, hit the subscribe button as well, and don't forget your 2 free stocks with Webull. I post every single week, so always stay tuned, and I will see you guys in the next video. Peace out.